We're at the turning of the tide here. We're coming up to two of the toughest months for the stock market, historically speaking. There's a lot of major economic shifts happening right now. Here's a few of the top headlines. Economic data in Europe just went from bad to worse. European business activity contracted once again during August to its lowest level since November 2020. Considering the PMI figures in our GDP growth forecast, leads us to the conclusion that the Eurozone will shrink by 0.2% in the third quarter. And there you have it. We've been talking about the recessions in Europe for such a long time, how it's getting worse and worse. The economic strains are tightening and tightening. And you're going to start seeing quarter after quarter of negative growth in a lot of these Eurozone nations. Is nuclear energy the answer to a sustainable future? Experts are divided. They've been divided for multiple decades. Well, I guess since the advent of nuclear energy power plants. But here's what I'd ask you. If there's an intelligent alien life form many planets away and they know what to do to get here in their spaceship and they can come take a look around and see what we're doing, what's going on here, and then fly all the way back to their planet, when they get there, they're not burning coal. And if you like what we do here, please support our work. Give us a thumbs up. Consider joining the Peter Leeds Army. peterleeds.com/army. We would love it if you guys would do that. The overall global economy is weakening pretty significantly, and a lot of that is because of the sudden weakening in China. But how's things looking here in America? Let's check this out. Analysts are now pointing to a soft landing for the U.S. economy. I think that they're incorrect. I think that we're going to have a serious enough recession. And I think it's going to happen relatively soon. But I've been saying that for a while, so believe what you want. Find your own information, make your own decisions. I don't think this economy is healthy in just about any way that you would look at it from. And the result of that is that our overall quality of life takes a little bit of a deterioration. The S&P downgrades multiple U.S. banks, citing tough operating conditions. A sharp rise in interest rates was weighing on many U.S. banks' funding and liquidity, S&P said in a summarized note. Deposits held by Federal Deposit Insurance Corp. Insured banks will continue to decline as long as the Federal Reserve is in quantitative tightening. There's a big summit right now for the BRICS nations in South Africa, and these 5 countries are just getting closer and closer economically, politically, diplomatically, and a big part of that could be the BRICS nations' gold-backed currency, but it's still in development. It's been in development for a while. It's been mostly talk for a long time, and now it's coming down to the short strokes. That's an example of one of the major shifts going on in the economy right now. Soon it's going to be the digital currency. Add that to the BRICS nation making an alternative currency. Add to that the slowdown in China, and then add to that the slowdown in Europe at the same time. I'll say that it will be really hard for America to skirt a recession, given the overall economic environment worldwide. Foot Locker shares plunged 26% as it slashes guidance and blames consumer softness. Yeah, blame the consumer. It's their fault that you're not operating your business profitably. You can't blame the consumer. They're just not buying your stuff right now. But this is just an example of how this weakening economy is going to start hitting a lot of businesses. The revenue expectations, the revenue realizations will be lower. The dismal quarter prompted Foot Locker to lower its forecast for the second time this year, just 5 months after the first time. The sneaker giant saw another quarter of pinched profits because of markdowns and shrink. They're blaming the consumer, they're blaming markdowns, they're blaming shrink, they're blaming everything except for themselves. So I'm just trying to give you a smattering of everything that's going on right now. A lot of things we've been talking about are playing out as you expected they would, like we're seeing in Europe, like we're seeing with American companies coming in with weaker numbers and disappointing results. And as we go into 2 of the toughest months of the year for the stock markets, you should be diligent, you should be keeping an eye on all of these things. One particular headline isn't necessarily so significant. The reason I tell it to you is to show you different aspects of the economy. There's going to be a lot of defaults, there's going to be a lot of delinquencies, a lot of companies coming out with weaker results, weaker than they had expected. But what do you do about all this? Besides educate yourself, learn how to make the right decisions. We can help you with all of that stuff. There's also a lot of ways to turn a few $100s into a few thousand. And you want to learn more about that, you just zip over to peterleeds.com. We may be at the turning of the tide. As we approach 2 of the worst months of the year for the stock market, the risk-reward profile suggests caution. We're probably going to get one more rate hike in 2023. But the real pain from those rate hikes is just starting to be felt now. It's going to get tougher financially for consumers and for corporations. Think of it like sunburn. The damage gets done before you even realize you're burnt. There have been a few people who have called that the markets will start coming down pretty heavily once rates stop rising, which is counterintuitive, and that's a very rare viewpoint, but I'm closer to agreeing with it than disagreeing with it. The setup that we're in now, however you look at it, it does have the potential to be a huge buy the rumor, sell the fact event. Everyone widely expects the markets to gain once rates start dropping. History says that the stock market will start gaining. The thing is that the mob of people act on their beliefs. They expect the stock market to do better, so they buy more. They keep driving it up to that point until the very moment of the first rate cut. There will be no more buying at that point. Retail investors will be out of the game. There's going to be far more potential sellers than buyers. And a lot of shareholders are going to become sellers when they realize that the pop they were waiting for never materialized. At that point, even a gentle pullback has the potential to become an avalanche. History says we're going to have a very low double-digit gain in most stocks, about 11 to 14%, usually over 16 to 26 months, once rates begin to fall, until the rate-reducing cycle has run its course or it's come to a completion. Rather than try and choose which way things are going to go, rather than pick a side, I set up my own personal portfolio with commodity stocks, mainly centered around gold and oil, and very few other types of stock market investments. Talk of recession has softened up in recent months. Most analysts are now predicting either a soft landing, no recession at all, or a very mild recession. They are incorrect. We will get to see exactly what I mean all too soon, unfortunately. An event's going to happen, such as a sudden major bankruptcy, or an unexpected financial contagion, or a Minsky moment, or the mass market realization of the massive pension shortfall we're all going to be dealing with, or a black swan event, or an appropriate U.S. credit downgrade, or some of the ripple effects coming over from Europe or Asia. And everyone's going to think, okay, the recession only happened because of that event. Once the event that they're going to blame the recession on happens, then we're going to talk about this again. So don't forget that part. NFTs, a property in the metaverse. From 2022 to 2023, floor prices for virtual land dropped between 85% and 94%. These are the companies that are selling virtual land. And if you didn't know that buying virtual land in the metaverse was a bad idea, there's not much we can do for you. But here's some of the companies that are making the virtual land happen. Voxels was down 94%. Somnum was down 94%. Sandbox was down 84%. Decentraland down 87%. Other Deeds down 85%. Add to that, all the NFTs are getting hammered. And then the altcoins have done and are continuing to do exactly what we expected and exactly what we told you they're going to do. A lot of red when you're getting a quote on them, and some absolutely ugly and frightening trading charts. Further real estate implosions are ahead for China in the near future. You heard about the big Evergrande blow up, a few of the other companies as well. But lost in all of this is the plight of the millions of people who are losing their life savings. They've lost their future home. They're left with nowhere to go. China has major demographic problems. For example, there's not enough young people. Another example is they've got a declining population for the first time since we've been keeping track of this stuff. They just had a major economic slowdown, not just in terms of economic activity, but double-digit drops in imports and exports. And now you add the real estate implosion to it. The chance of contagion from a lot of these problems that are coming over here from Asia is getting greater and greater. The real estate problems in China are very compartmentalized. It'll affect people in China. It's affecting them very badly. It's affecting the economy of China horribly. But there won't be any direct effects on America from the real estate problems in China. The other problems that they're facing, there's going to be a lot of direct effects all over the entire globe. Gold has been underperforming in recent weeks and has taken the mining stocks down with it, of course. I'll tell you what, if you haven't purchased physical gold or physical silver, or you haven't bought any of the high-quality mining companies we like, then this very moment may be a great time for you to make that move. You're getting it at a discount compared to what it should be at. The next few months for gold, but also for the overall stock markets, are going to be absolutely pivotal. Prepare and adjust your portfolio and be ready to jump on the opportunities which are going to present themselves. Do not take the coming months and quarters lightly. We've got a couple of tough months coming up right now, and a lot of bad things coming together at once.